Welcome to the weekly market view from Capital Spreads. I'm joined by Bill. How are you, Bill?
I'm sorry.
Oh, you just woken up.
It's the excitement of this week.
Well, let's face it. I mean, the week has been unbelievably quiet. I mean, you know, you've been in the markets longer than I have. I've been in markets for quite a few years. I don't really recall it being this quiet for some considerable time. What's happening? Quiet before the storm?
I think it is. I think the market's still getting over the positive shock of last Friday's considerably better than expected US non-farm payrolls. We're getting, again, the flow-through of positive economic data. And remember, next week, don't ask me about this European summit because you know what my comment's going to be, but next week on the 20th we get both the Federal Reserve in the US and the budget here in the UK.
Yes, but so things should improve in terms of news flow.
Yes. What
about volumes? And whilst you mentioned the budget, this week I think we were given a sharp reminder of the UK economy. That terrible industrial manufacturing data earlier in the week. What is the Chancellor going to do to help improve things? Because next time we meet, he would have spoken.
Yes. I think Angus, and this will be his fourth budget. The first three have missed the mark by a considerable amount. I think one of the things, are we going to have a political budget or are we going to have an economic budget? I mean, when the Prime Minister keeps saying, as does the Chancellor, yes, austerity is this, that, or the other. Well, if you've got no money to spend, there's going to be no economic recovery. And I think one of the things that's also, you mentioned industrial production yesterday, if you look at the trade numbers, I mean, we're importing a massive amount. And I can't remember who told me yesterday we were talking about it. It seems to be 2/3 of what we're exporting is air, meaning the ships are coming in full and leaving empty.
Yeah, so obviously exporters probably need a bit of a boost, and they're not getting it from sterling at the moment. And interesting how much sterling has weakened. So with cable below 1.5 and looking pretty happy below there, what are your forecasts for sterling against the dollar and against the euro?
Well, near term, and again, near term could be the next hour or so. I'm looking at 148, and then if you're a technician, it's 146.60. And the key thing, as I said, and what you just mentioned about industrial production, I think now it is really going to verify my thoughts that as early as maybe the April meeting, okay, we could get 25 to 50 billion quantitative easing from the Bank of England.
Well, it's interesting that you say that because, of course, you've been calling for that most of this year so far. And I would have thought that if it was going to come sooner or later, it would have been this month.
Well, I think they didn't do March because of the budget, okay? Did they not want to get political, okay? The bank has to be apolitical. But I mean, the numbers are just not going anywhere. And I think the thing, if you look at the charts and you look at the graphs, I mean, like in the last almost 100 years, we have, if we're not in a triple digit, in a recession, we've got the slowest recovery, period, as I say, in the last 100 years. It's just not happening. And the simple fact is, you know, you've got, I'm not saying it's inflationary, but you've got petrol prices up 5p. You've got this up 5p. And it still is a situation where, you know, what pay rises you're getting are well below even a low inflation rate. So nobody has, quote, spendable income except the Bank of England.
The Bank of England. What's your take on the Bank of England's debate over zero interest rates? Do you think that we're going to see them?
Well, I think one of the things we have to look at is, you know, as we get closer to 1st of July, not that Sir Mervyn is going to get reckless, but I mean, it's a situation now where he still will be the Bank of England governor up until the 30th of June. And so it'll be a question of how important it is, where his feeling is for the UK economy. Negative interest rates, you know, it's talking about savers, the pensions fund. I mean, Angus, for the last 4 years, okay, with interest rates which haven't changed, real interest rates have been negative.
Yeah, so really it's sort of, even if it does happen, it's, we're already feeling the effects.
Exactly right. I mean, you know, if you've got your, you know, your account, you're getting a quarter of 1% or a half of 1%, and as I say, with inflation, you know, you're paying you know, the building societies to keep your money.
And so, even though things have been very, very quiet, and across the pond, things still seem to be pretty rosy. I mean, tremendous retail sales data. The Dow, I mean, you know, it just holding those highs, and the S&P is not far off an all-time high. Do we see a continuation of that trend? And,
I think so.
You know, because the markets have pulled back FTSE a little bit.
Yes.
Straight back to 6,500. In the US, there's not even any sign of retracement.
And the sequester, or whatever you want to call it, that isn't thought about. One of the things I think we have to think about, though, is one with the fiscal cliff, 1st of January. If you, and most Americans get paid twice a month, so you were probably losing on a net basis for your January and February paychecks. You were losing about $40, and now with the increase in payroll taxes, again, it's a situation where you've done nothing wrong, but all of a sudden your paycheck is lower. And again, in the States, petrol prices are going up. And again, the concern, and it'll probably be reiterated at next week's Federal Reserve, as Bernanke said last week, at the old Humphrey Hawkins, that, you know, the sequester, as it's programmed, looking at it from last week's standpoint, you could lose as many as 500 to a maximum of 750,000 jobs in governments, in defense, etc., etc. Well, you know, yes, we're having an improving employment picture in the States, but I mean, you know, no economy can afford to lose these kind of numbers at a time when it's not going. So, you know, again, we're talking about next week's direction. Fed fund futures are applying probably mid to say second or third quarter of 2015 for probably 25 basis point rate hike. We'll have to wait to see what the Fed says next week, to where they feel that 6.5% and 2.5% inflation rate.
Yes. So with the Fed next week, the budget next week, things should haul up a little bit.
Yeah, but then again, we've got, you know, then we've got the long Easter weekend, which is the end of the fiscal year. So I've been surprised that we haven't seen any, quote, profit taking, but it does mean that no matter how high we get, I would advise clients, and I haven't started to advise clients, be prepared for a end of quarter, end of fiscal year profit taking in early April.
Well, we'll keep an eye out for that. Let's hope that next week's a little bit busier. Thanks a lot, Bill.
Excuse me?
Thank you very much.